how we select our trades and the strategy that we use on our trades. It's absolutely critical to understand how our trades are created and how they're selected. And this is where the part of really trading as a business comes in, because we don't trade without a plan. Now, if you go into any kind of business, you're going to create a plan, whether it's just on a single piece of paper or even on a napkin, but you're going to have a plan for that business. It's absolutely critical that you trade according to your plan. You don't trade by the seat of your pants. You don't go into a market and just trade by buying and selling options of any kind without really knowing what you're going to do in case the option that you're purchasing goes against you. So you got to have a plan, and that's where the trade selection strategy comes in, because we take a look at how these trades are selected, how we plan out the trades, how we select them based on support and resistance points in the underlying index, and how we go about adjusting them. And the adjustment videos are probably the most crucial part of this entire system, because once you get into a position, it's easy to take profits when the market doesn't move, because those options will simply expire and you collect the cash. But what happens when the markets move against you? So you have to know exactly what you're going to do ahead of time. And that's why we always say trade with confidence, because if you know ahead of time and you have a plan of how you're going to adjust your position so you're always in a profitable position, then you are not going to be afraid. You are going to trade with confidence. So that's our overall objective, if we really want to simplify it, is to take this white line, which is our opening position, and sit tight until it rises gradually up to this green line where we take our maximum profits. Normally we don't wait till expiration to take our maximum profits. We normally take our profits right around the 50% to 60%, sometimes a little bit higher, depending on the current market conditions. We don't normally go all the way to expiration, and there's a reason for that. Normally in the last week of expiration, before an option expires, there's a lot of things going on with that particular option that can affect our position. Also, price could be a risk. Depending on current market conditions, we could have a profitable position, but if we go into the final week of expiration, then the position may become unprofitable because of price risk. So normally we don't want to take those type of risks, and we take the position off prior to expiration, usually 7 to 10 days prior to expiration. And that's not such a bad thing. And I'll tell you why, that nobody else will probably ever tell you, not anyone from retail investor, probably not any market maker either. I'll tell you this now, but you may not understand exactly what I'm talking about. But these Greek positions, the delta, the gamma, the theta, and the vega, will change dramatically as we get closer towards expiration. In fact, theta may drop off dramatically. Theta is the primary profit producer for these types of positions. We want this theta number to be positive at all times. The closer we get to expiration, because we're doing a lot of out-of-the-money credit spreads and double diagonals, there may not be much theta left. In other words, if there's not much profit potential left in the position, why keep the position open? Because there's only 7 days left to expiration, the options that we've written are extremely low priced options. If there's only $1.83 of theta left on a per day basis, why take the price risk? Why take the risk of the price moving against you when there's only $1.83 of profit potential in the position? It doesn't make any sense. It's just like a business that has a very low margin item. Let's say you have to pay $850 to a wholesaler for, but you can only sell it for $900. Well, it doesn't make a lot of sense to keep that kind of a product in your stock at such a high cost when there's very little profit potential in it. It's the same thing here. We only want to keep this position as long as theta is working in our favor. Theta is the rate of decline of the option that we sold. In this case, in these positions, which are live positions, we're collecting $31.37 a day in decay of the options that we've written. If that continues to decline, then we do not want to hold that position any longer. It doesn't matter what our current profit and loss position says at this point. Eventually, theta will catch up. So that's really our goal. Our goal is to move this white line up to this green line and keep our price in the center of our profit graph here. So, hey, enjoy these videos. You're going to find a way to trade that is unbelievably profitable that will serve you for the rest of your life, because these principles do never change. I also want to show you what the current profit potential is. Like I said, we only do 1 or 2 or 3 contracts. Now, when you get to the position where you start to have a great deal of confidence in your abilities to not only put on, select, and plan your trades, but also to adjust them, then you can do as many contracts as you want. Like I said, we're only doing a couple contracts on each one of these positions. Well, our profit potential is, at this point right here, $1,289. And that's only 1 or 2 contracts. What if we were doing 10 or 20 contracts? Well, just add a 1 to that, add a 0 to that. Now we're up to $12,890 in profit potential. And normally we only hold these trades about 3 to 4 weeks. Now, that's not a bad profit potential. This is how professionals trade the market as a business. They don't leave things to chance. They manage by the numbers. They manage their positions. And they adjust when necessary. And that's how money is made in the markets. There really is no limit to the amount of money that you can make. As long as you have the capital, you have the principal, you can make as much money as you want. That's it for this introductory video. I hope you guys really got excited about this, because it is a very exciting business to be in. You're going to have a lot of fun in this course. The videos will blow you away. You'll learn stuff that you've never learned from anyone else. Believe me, I've been trading and investing for 20 years. And it's extremely rare that anyone has ever revealed these types of trading secrets before, because I've taken the $3,000 seminars, the $5,000 seminars, and there's $20,000 courses and seminars, and there's very few people that actually learn how to do these types of monthly income trades. It's extremely rare. But once you learn it, this is the kind of stuff that you can hand down to your kids and your grandkids, because the principles will never change. Okay, guys, trade with confidence.